Hello guys and welcome back to the channel. And let us start our weekly outlook for Forex. We will start from DXY, and before doing working on the charts, first we will see what is seasonality telling us. Normally October, November, December, these are 3 months where market follows seasonality most of the time. And for US dollar index, seasonality for October, November and December is kind of bullish. From mid of October to mid of December, dollar is mostly bullish. Let's see what dollar's chart is telling us. Let me remove the old drawings. Now DXY has taken buy side liquidity, then it attacked sell side liquidity in the month of April. From April till now, it is doing some sort of consolidation. If we look to the left, we see there is a demand zone available here. So let me refine this demand zone on smaller time frames. So this is our demand zone. Price has tapped demand zone. Before tapping the demand zone, price has again taken out the external sell side liquidity. Now seasonality is telling us that price should be bullish now, and today is 18th of October, and the chart was telling us, seasonality chart was telling us that after mid of October dollar starts to climb. So once this consolidation breaks, next 2 months should be bullish for dollar. Monthly target will be at least this fair value gap, and then this fair value gap. So for now, on higher time frame perspective, I am bullish on dollar. It means remaining currencies will be bearish. Let me analyze it on daily also. So price has taken this liquidity here. After taking out this liquidity, it has given internal break of structure. After this break of structure, price has given external break of structure. It has taken this mitigation, but since my analysis is bullish for dollar, I will consider it as smart money trap. Now what do we have here? This is sort of pending, but I do not think that this mitigation is going to happen. After taking out this mitigation, if we zoom out, so this is kind of market maker buy model forming on a higher time frame for dollar. So this can be our initial consolidation. Then this will be our first stage of distribution. Second stage would be here. Then the third stage. So consolidation, this will be considered as initial consolidation, first stage of distribution, second stage of distribution, third stage of distribution, and then it has taken out sell side liquidity and also has tapped a demand zone in monthly time frame. After that, on daily time frame, it has given a break of structure. So let us see how much retracement it has given after taking out the break of structure. So it has not came down to take out this order, to take mitigation from this particular order block. it has, this is a miss many ways, and then it has went further up. Now this is a good mitigation area, but considering the amount of mitigation areas available here, what I think is price has to come back down at least up to this mitigation. So Monday, Tuesday, and then rest of the month until December. We will be trading until 10 December. Let's see what has happened on the T bonds. This has been taken out, DXY, T bonds and everything. Let me open 3 windows. This is my DXY, this is T bonds. Let me open 4. So DXY 5-year, 10-year note futures and 30. T bond 5-year, 10-year. SMT here. Then we have SMT here. And then we have SMT here. So yeah, I am kind of bullish in dollar. Now let us analyze euro. Bullish until 10th December. Let me anchor this here. Now this is our Euro USD monthly chart. So again for Euro USD also we will start from seasonality. Euro from October till November it is bearish, so I will consider it as bearish seasonality until mid-November. Let me anchor it. Now on monthly chart, let's see what it has done. It has tapped this particular fair value gap here. After tapping this fair value gap and making a hammer last month, so far this month is bearish. Let's go on daily time frame. So in monthly, what it has done, it has tapped a fair value gap which is in a potential supply zone, and price started to break down in December. So it has taken out external liquidity. Now price has to attack towards internal liquidity, and our first target can be this one, this fair value gap, and then this fair value gap. So this is valid until December. Let's look it down in a smaller time frame. So this is sort of consolidation. After consolidation, it has taken out the sell side liquidity on daily time frame. Then it has started to break down. Now again, this is my internal breakup structure. This is my external break of structure. Now price has broken down, taken out this consolidation completely, went up, taken mitigation from here. Let me check if this order block has already been mitigated. Yes, this one is already been mitigated. Still, if we see, there is a chance that price comes back up one more time, take out this high and then drops. There is a chance, but price can just start to drop here. So we will see about it, and if we zoom it out like we did in dollar, it is kind of market maker sale model available. This is my initial consolidation. Then this will be first stage of distribution, first stage of accumulation, second stage of accumulation, and then third stage of accumulation. And then it has went up, taken out the buy side liquidity, did the mitigation of a fair value gap, started to break down. This is our break of structure, another break of structure. Now price is standing here. So normally in market maker sale model, what we look for is after taking out this break of structure, price should come back to this will be my break of structure, which has happened here. Now what normally what we want is it can happen and it cannot also happen. Price to take mitigation or take out some sort of liquidity within a premium area. So this would be an ideal case. This will be a low risk sell, very low risk sell if your stop loss is here, but sometimes this can also happen. Anyways, for now this has not happened. So what I expect that if not inside this leg, then inside this leg price should come up to here and then it should drop. So I will be shorting from this area somewhere. So Monday, Tuesday price can go up, take out this buy side liquidity. If this happens, I will short it for a long term sale. My stop will be here. So I am bearish until mid-November. Let's see what price is doing in GBPUSD. Again, we will start with seasonality. Now for GBPUSD, it is better to avoid it or to do scalping only, because seasonality, which is showing from October till November, it is not a trend, more of a consolidation. So avoid taking long-term positions in GBP. So with that in mind, let's see what it has done on monthly. So it is in the consolidation. We have seen euro and dollar taken out this buy side liquidity and sell side liquidity respectively on this month. It means last month, September. But GBP has not taken out this. So GBP is more in a consolidation, and I do not expect big moves until December. So with that in mind, what I would suggest is do only scalping or intraday trading in GBP USD. Now on daily time frame, it was in consolidation, taken out buy side liquidity. It has taken mitigation from this particular area, and it will be valid until the mitigation of this area, which has already occurred. It has taken this liquidity also. This is external. After external, it went into the internal demand supply zone. After taking out internal, it has made a doji type candle. Now our intraday targets will be toward the sell side because dollar is strengthening, but totally intraday targets. So for GBP USD, I am bearish until November, but I will mark it as bearish but in consolidation in higher time frame. So with that in mind, we will be doing only intraday or scalping in GBP USD. So that's it guys for now. For gold, I will make a separate video. See you in the next video. Until then, stay safe, take care.